Well, welcome back for my final morning report analysis video on Monday 17th of September with me, Richard Permarket, analyst at Hantec Markets. Looking at the gold chart, which had a couple of negative candles closing out the week last week. We closed both days pretty much at the low of the day and fell away. You sort of lost the momentum in this little recovery move and it's just sort of rolled over again. But today's candle, slightly higher, $4 higher. It sort of questions now where we're at, because I think this is becoming increasingly range bound with those two candles that we saw ending last week. The RSI between 40, 50, 52, you could argue. But the fact is that the MACD lines are sort of just tailing off a touch. Stochastics have turned down, but not in a distinctive way. And I think unless you sort of break down below 1283 or above 1217, I don't really think you could say you're especially either way on this chart, and I think it's in just a continuation of this consolidation phase that we've been in. I still ultimately think the dollar will be driving the gold price direction. Strengthening dollar would hit gold, but equally if the dollar starts to suffer again, I think we can see gold embarking upon a nice little rally. But for now, you're fairly much consolidating and little real direction. So let's have a look at the hourly chart. Again, little really to be gleaned from that. A little bit of a pivot, you could argue, around $1,200. I mean, it is the psychological level more than a price pivot, but it has undoubtedly sort of been a turning point in the recent past. So it's not to be discounted, I think. So $1,200, but as I said, momentum indicators neutral in the sense that it's sort of ranging. MACD lines are and stochastics have ticked higher, but 1200 needs to be broken. If that can be done, then you're looking at 1209 and 1212 area again before the 1214 resistance kicks back in from the traded high over the past few weeks. So with that in mind, I wish you good luck in your trading, and I will speak to you again tomorrow.